Happy Monday out there, Team 42. It's your skipper here, Darius to present our macro minute for Monday, July 8th, 2024. As always, we'll start with the executive summary from today's lead-off morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio, you need to be a client of 42 Macro. So today's key macro events are sanguine French election results, previewing a big week of economic and policy updates, and Boeing pleads guilty to felony fraud. In terms of market implications, the French elections came and went without the development of significant risks to France's EU membership. While investors should expect the rally in European assets and the euro to continue, we do not believe European stocks are likely to outperform their U.S. counterparts over the medium term. A big week of economic and policy updates is headlined by congressional testimonies from Fed Chair Powell and Treasury Secretary Yellen and June CPI. These developments may help resolve the debate regarding the market regime, which itself pivoted back to its prior condition today. Refer to slides 8 to 12 for more details. Boeing's continued malfeasance represents a threat to the medium to long-term economic outlook, given its importance in the U.S. and global aviation industries and the outsized share of services consumption in driving U.S. growth in recent quarters. As always, we'll transition to our 42 Macro dashboard here, wrapping up with a question from our community. This one's regarding gold and Bitcoin. Says, hi, Darius, newbie here. Thanks for all the great info. As a new investor, I appreciate the cold, hard data without the pumping that is so common to the finance world. Thank you for that comment. Appreciate you. So out of curiosity, in the Around the Horn, you stated that global liquidity is the dominant factor for gold and Bitcoin, yet gold seems to be bullish currently and Bitcoin is bearish. Why the discrepancy? So it's a good question, actually, great question. And so the key takeaway is that even though gold liquidity is the dominant factor for both gold and Bitcoin, it is not the only factor driving gold and Bitcoin. There are a myriad of factors that are contributing to investors making decisions on the supply and demand side of every market price, gold and Bitcoin included. So the sum of all the factors that are influencing the bid and ask, transactions in the gold market are currently contributing to its bullish FAMS condition, bullish 100% of our volatility adjusted momentum signal, and the sum of all the factors contributing to the sum of all the factors contributing to the bid and ask transactions in the Bitcoin market are contributing to its bearish FAMS condition. So just be aware that a lot of times, particularly in the retail investor space, institutional investors know better, but retail investors may not know better in the sense that, when you turn on Twitter, you listen to finance podcasts, pretty much anywhere where you're getting free financial advice, which is free for a reason, by the way, anywhere you're getting free financial advice, the primary goal of the person providing that free financial advice is 9 times out of 10 to get you to click on something or to get you to subscribe to something. It's to get your attention. And so the reason we tend to see overly simplistic explanations of what's happening in the economy and in the asset markets is because simple is what sells. If you make a big headline about a very simple thing that apparently is driving every single thing in asset markets, at least allegedly is driving every single thing in asset markets, that allows you to get more clicks than you would if you actually told the truth, which is, okay, all these factors are currently contributing to this price, and all these factors are currently contributing to this economic outcome. That's not very sexy, but it's the truth, and the truth should set you free in terms of actually experiencing good outcomes in your portfolio. So you have to think about this from the perspective of, okay, what gets the producer of the content paid versus what gets me paid as an investor. And what gets you paid as an investor is understanding the full distribution of probable economic and market outcomes and understanding the full distribution of factors that are contributing to the supply and demand for a given asset at any given time. And so this is why, our process, tends to be a lot more boring than the, sexy buy everything, sell everything. This one thing is determining everything, or this one thing is determining that everything. That's just not what we do here at 42 Macro, because that's not what institutional investors do across the global buy side. So we'll wrap it up there. Darius presenting our macro minute for Monday, July 8th, 2024. Everyone have a wonderful day out there. Best of luck, and we'll catch you back here tomorrow. Cheers.